Welcome back to the Crypto Factor. Welcome back to Gareth Soloway. We're going to be doing a deep dive in Bitcoin, in cryptocurrency, in gold, in oil, in stocks, and you name it. The shops down the street, oranges, apples. I'm getting a little bit ahead of myself. Gareth, welcome back, man. It's great to see you.
Right. Thanks for having me back, Paul. Thank you.
Well, thank you for being here, man. We have so much to talk about today. We have so much, but I got one question before we start. First of all, we're going to start with Bitcoin. We're going to talk about some oil, some stocks, and go into cryptocurrency later on. I'm going to ask you for a couple of cryptocurrencies people ask me to analyze. But let me ask you a question. We made a bet not too long ago. Are you feeling okay with that bet? Do you think that bet will be lost? Do you think it's 50-50? What are you giving it?
Well, I think you got to refresh everyone that's watching what the bet was, right? So, and then we'll discuss.
All right. So the bet was that Gareth is calling 10 to 12K. I am calling 17K, maybe a drop down to 15.6K. Gareth, what do you think, man? What are my odds?
I'm still in the camp that Bitcoin's got more downside. Again, whether it's 12, 13, whether it's 10, whether it's 15, we'll see. But I'd be hard pressed considering the situation with the Fed, with the inflation. You know, this is that first cycle, the first bear market cycle for Bitcoin where the Fed has not been printing money. And I think you have to take that into account and say, well, why would this cycle be less downside than past cycles, which are been 80 to 85%? So to me, it makes me even a little nervous, like it could go lower than 12, 13, which would be 80 to 85%. So hopefully that doesn't come to fruition. I'm going to start accumulating, continue accumulating in the teens and the low teens, even down below. But I would love to see a bottom sooner than later. But I got to just say to myself, what are the charts saying? The charts are still saying downside.
Okay, but if you really think about this, Bitcoin hasn't always dropped 85%. I think there's a couple of times where it dropped around 75%. That's number one.
Right.
We could check that, of course. Number two, I understand with the Fed, something I didn't look at or didn't anticipate, and I don't know why, was China. So that's not going to help too much if we have another crash there. But I also think that China might have to do anything it can to stay in power. So we'll see if they start printing.
True.
But yeah, anyway, yeah, we'll see. It's interesting. It's interesting. But if you were to give it odds as a trader, risk reward ratio, what do you think my odds are? What do you think your odds are right now?
Well, obviously, I'm going to favor my side versus your side.
Okay.
I mean, so I would say 70-30, 70-30. We'll go with that. That's not too bad either way.
Not too bad. Not even a 60-40, 70-30. That's crazy. All right. Okay. Got you, man. All right. Let's dive into the charts, man. Let's see what you got. Let's see.
All right. So let's take a look at Bitcoin's chart right off the bat here. Yesterday was looking good. We had a nice bounce. The dollar was falling a little bit. Today, the dollar started to gain strength and it just smoked Bitcoin. And let's be fair. I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. And that's really what this is at this point. I mean, you look at the dollar, the DXY, and you can see this inverse relationship. And that's not the DXY. There we go. So this is the DXY. It's been in this channel. You see we hit it here. We pulled back. We're kind of just chopping sideways here. You could make a case it has a double top, but it does concern me that there's still a chance the dollar could pop one more time into this upper band before it starts to come back in. So again, you know, Jerome Powell, he was out there on last Friday with Jackson Hole, and he just smoked the market by basically being extremely hawkish. And that we saw Bitcoin drop. We saw the stock market take a massive dump as well. And this is a market, again, that is worried that, number one, Jerome Powell is going to push us into a steep recession. But number two, they're also worried. They want the free money. They want the drugs, right? The drugs was just printing. Yes. And the Fed is talking a tough game right now.
Do you think they're going to go through with it, or do you think they're going to change their mind? Because usually a lot of things they say doesn't always come into fruition.
Yeah, probably the biggest one was transitory, right? Yeah, so much for that.
True.
But the bottom line is no, I don't believe them. I think they're talking a tough game. They don't like the fact that the stock market off of its lows rallied 20% in a couple months. That is inflationary. It makes people feel richer, then they spend more money. So they want to talk the stock market down. That's why what we've seen happen has happened. But I do think that the Fed is at a point where they're going to raise 50 points, 50 basis points in September, maybe another 25 by end of year. And then I still think the economy is weakening very quickly. It hasn't shown in the jobs numbers yet, but we have a big jobs number on Friday. I want to see what those numbers show. If it shows weakening, then I think the market actually might rejoice and rally, which is really messed up, right? I mean, we're seeing good numbers, good economic numbers, and the market is selling off. The market wants a weaker economy, so the Fed gets on the sidelines.
Yeah, I see too. What would you say the reason for the dollar going up is?
Yeah, so I think it's a combination, right? So the Fed, by raising rates, is sucking money out of the system, right? Think about a vacuum. It's going back to economics 101. Less dollars in the system, then the dollars are worth more, right? So that's why printing of money, the dollar should go down. They're doing the opposite right now. The dollar goes up. Then you also have Russia. That's a concern globally. You have China and Taiwan. That's a concern globally. And what we know is historically, if people are worried about geopolitical events, they go to the dollar for safety.
Yes.
Now, a lot of people don't understand this, but they like, oh, but the dollar, it's been printed. We got so much debt here. Yeah. But you know what? Every other country is in the same boat. We're still the ship that's floating the best with holes in our hull, right? So it's still the best out there, and so people are still going there for safety.
All right. Do you think that the Fed will have to print money to put the dollar down? Do you think the dollar can go too high at some point?
Yeah, so I think the higher the dollar goes, the weaker the economy. So I think this is absolutely this inverse relationship. And a lot of people, I mean, listen, for average Americans, a strong dollar means we can go to Europe and it's cheaper for us to go to Japan. I mean, our dollar goes further. The negative is for the economy is that a company that sells in countries, right? So let's take IBM. IBM in their last conference call said they took a $3 billion loss due to currencies. And what that means is that they're selling something in Japan and they're getting yen. And by the time they convert it back to dollars, the dollar has strengthened and they're getting less dollars for that. So, for instance, it might be a 10% revenue haircut just by that conversion taking place. And so that's really the negative, how it's hurting earnings. And by default, it's hurting, these companies. And therefore, we're seeing stock prices also go down.
Got you. By the way, hit that like button if you're getting value from this video so far, and always make sure to check out Gareth at the links above here.
Thank you.
And if you like this interview, then maybe you want to subscribe down below as well. It's up to you. So people are running to the dollar. We know this. What about gold? Shouldn't people be getting into gold right now?
So generally, I think the mid to long term is hugely bullish for gold, but right now a rising dollar is a negative, right? So we know historically yields, the interest rate going up is usually a negative for gold because gold is versus the bond market, right? So if you can get 3% free, tax-free munis or whatever it is, or government bonds, well, you have to put that against the safety of gold, and therefore gold generally sells off. When the dollar goes up, gold is traded in dollars, so the price of gold goes down. Now, again, I think that by the end of this year, you're going to start to see the dollar fall. People are going to start to realize, investors are going to realize that the Fed is out of bullets, right? So we're going to get into a recession. And how is the Fed getting us out? Because every recession for the past, let's say 20 years, the Fed has just said, oh, well, let's just print money because inflation is under 2%. Print it, print it, print it. That gets us out. Well, guess what? Inflation's not going to be under 2% by the time the next recession hits, whether it's this year, next year, or the next year after that. So the question is, when we get into a recession, how do we get out? My fear is that we're going to be in this long, drawn-out recession. And eventually it's going to get so bad, the Fed will start to print. And that's where the dollar falls. That's where gold and silver and metals start to really rip. And in all fairness, I think that's where Bitcoin starts to rip as well, where people finally realize the Fed has lost control. They've lost all credibility. And then you see these assets start to take off as safety measures.
But and let's have a look at the gold charts, by the way, but would other cryptocurrencies also rally with Bitcoin? Or do you think Bitcoin will decouple like it decoupled in the past? but not so much the other cryptocurrencies.
Yeah, so I do think Bitcoin will decouple and it'll become more like the digital gold. So this
Mm,
is the gold chart we see before us. But I do think that at some point you do see this change where Bitcoin has been historically that risk asset. It goes down when markets go down. I eventually think it's going to switch into more of a gold where it goes up when things are scary.
yeah.
Now this is the gold chart, and what's amazing about the gold chart is number one, it's still the best performing asset between Bitcoin and the stock market for the year. I think it's down about 4% or 5% on the year. But basically, look at this trend line: pivot high, pivot high, pivot high. We broke out. We tested this line again. Now we're testing it again. I think gold's a buy here. I think you're above
Yeah.
this line. I think you're going to start to head up. You could even be forming maybe an inverse head and shoulders here if we start to trade up. And again, I like gold here. I think it's a good play. It tells me that the dollar may be topping out. And by the way, that's another important point to make here. So think about this for everyone watching. Last Friday, Jerome Powell, probably the most hawkish he's been ever, right? I mean, it just crushed the market. NASDAQ was down 4% in a day. That's a
Yeah.
huge move. And everyone's like, oh, he's so hawkish. They're going to raise by 100 basis points. They're going to continue to raise. Well, go ask the bond market if that's true, because the bond market is the biggest, smartest investing market out there. And you know what yields did on Friday? Nothing. And what that tells me is the bond market is calling Jerome Powell's bluff and saying, no, we don't believe that they're going to be able to raise that much more. And if we go to the 10-year yield, here we go. This is the daily chart. We're not even back to the highs from June on the 10-year yield. That's calling Jerome Powell's bluff and saying, we don't think interest rates are going to go much higher from here. Again, I still think 50 basis points in September, maybe another 25 later in the year. I think that's it. And I think the bond market's confirming that.
I see a little doji there at the end. Is the bond market the market that knows all?
Again, it doesn't know all. It's not infallible. It's not perfect, but it has the biggest money. I mean, trillions and way more than the stock market is in the bond market. And so they tend to look at it as like, this is where the biggest smart money, the institutions hide all their capital. So it's going to have the best knowledge versus the stock market is kind of in between, where you have a lot of individual investors, but a lot of institutions. And then the crypto market's like, that's mostly just retail, right? And that's why it's so volatile. But the bond market is known as the smartest market out there.
Got you. Now, looking at gold, I can't help to wonder about what's going on with oil. I haven't been looking at charts this week, by the way. I was running around, very busy. I had some things I had to take care of, personal things. What's going on with oil? I actually missed all these moves.
Yeah, so oil has broken some key levels to the downside. I think, months ago we were talking about when oil was $125, $130 a barrel. I said, hey guys, it's not going up. It's going to fall. That's exactly what it has done. You can see here was your Russia invasion. And I love showing this chart. If we go to your weekly chart, actually, let's do the monthly. Look at the perfection of this. So if you connect this low to basically through here and through this low, and then you do a parallel line to this high, look at the high on the invasion. I mean, talk about the charts just dictating the max price and telling us that. You had the pullback, then the bounce, and then we've seen oil coming down. I still think oil comes down even more this year. In fact, if I throw up a trend line, this is my target on oil by year end, which is about $75 a barrel. So, you're looking at more downside here. Doesn't mean it can't bounce a little bit. But for me, if we get big enough bounces, I'm shorting oil. All right. You can't tell me that if the economy is slipping into a recession, and if we're going into recession, then Europe's going into recession, then I mean, everyone's going into a recession. And you can't tell me that demand for oil is not going to fall. At some point, you're going to see some resolution with Russia as well. In addition, let's be fair, Russia's selling all their oil anyways to the open market. They're just selling it to China and India, right? So, I mean, it's not like the U.S. and Europe's like, oh, we won't buy their oil. Well, they're just selling it to someone else at that point for a discount. So it's all ending up on the open market. And again, to me, that spells economic slowdown, oil still flowing out there. Oil's going to go down.
So what about stocks? What's going on with stocks right now? What's going on with the S&P? I know
so the S&P has had quite the dip, right? I mean, we've seen, especially, it was starting to pull back a couple weeks ago, but then obviously Jerome Powell's comments, he really threw a wrench and caused a massive exodus of capital. But I will say this is that overall, I do think midterm you're going much, much lower, but short term, I actually think you're getting close to some supports on the S&P 500. If we take a look at the chart here, so number one, look at the high. I mean, this is where charts, Paul, I mean, I'm a chart guy. Yep. How do people not look at charts? I mean, connect this top here, which was the all-time high, to this, and it gave you the exact high of this huge bounce. Not only that, but throw in your 200 moving average, and look, you went right to the 200 moving average right here as well. So I think that's remarkable. And the question is, as we're falling down here, where are we going? I think this is where the S&P is going to go short term before a bounce, right around 391 on the SPY. We'll probably bounce there, maybe coincides with a dollar decline. And then I think the next leg finally takes us down and takes out those lows. I still have a target on the SPY or the S&P 500 much, much lower, basically the pre-COVID highs. So I think the pre-COVID highs, we have to revisit that. I don't know if it'll be by year end, but I think it's very likely by year end or early 2023.
What a perfect storm, though, with everything going on at the same time. I mean, there is no way. I mean, okay, there's probably a few people, but no way you could predict so much can happen in so little time to be able to. I mean, it threw me off.
Yeah,
it threw me off completely. Anyway. Regardless, so what do you advise people to do? Let's talk about a few more cryptocurrencies, by the way. Let's have a look at, we already had a look at Bitcoin. What about Ethereum, and what are your opinions about it going on with the merge? Now, for me personally, it's useless to look at it with a dollar. Because just chart Bitcoin, the same thing. But what about if you chart it against Bitcoin? What's going on?
Yeah, so we could do Ethereum to Bitcoin. Sure, absolutely. Let's see what we got here. So, and again, I don't usually look at this chart, so this is going to be the first time I'm looking at this chart. I usually look at it in terms of dollars. But basically what you can see is you basically got this almost pseudo triple top up here. And now what's intriguing about that is that triple tops, the more you hit a level like this when it's a triple top, the more likely you get a breakout. Yes. So what this could tell us is that you might see Ethereum versus Bitcoin actually make a big move here. Maybe that coincides with the merge. We'll have to see, but it certainly is an interesting chart here. And you could even argue that you have this lower channel as well, right from here. So you have a kind of a pivot low here, and then over here, you kind of pierced it before this recent move. But this looks like a bullish pattern to me. So it wouldn't shock me to see Ethereum start to make a move to the upside.
Right. So here's my advice right now. Let me give my 2 Satoshis here. If we know that when Bitcoin goes up, crypto goes up, therefore Ethereum goes up, the play to get more Bitcoin right now, if that's your goal, is to get into Ethereum.
Yeah, I mean, assuming you get the breakout, right? So again, we always as traders, we don't want to jump the gun because sometimes we can get caught with our pants down in that scenario. So we want to see if it breaks out, then yes, I think that's the play where you're going to get Ethereum to start making more market cap or advancing its market cap versus Bitcoin's market cap.
Right, but just as a nutshell, I think it would be a good play because if Bitcoin goes up, Ethereum will go up. If Bitcoin goes down, we still have that sort of level we can be looking at to make more stats, if you will. What about XRP? What's going on with all the XRP army out there?
XRP.
For me, it's all the same in the bear market, but
yeah. So basically XRP, we're still waiting on this elusive judge ruling, which, by the way, I mean, how long is this going on? I mean, it's been like almost a year, I feel like it at this point. But basically what you have is you have the chart telling you that something is going to come out probably in the next month or so. The reason why I say that is you have this massive wedge pattern, and a wedge comes to a point, and when it comes to a point, price either has to break out or it has to break down, one or the other. And right now you're just hugging the lower end here on that chart. So you want to see Ethereum, you want to see Ripple hold the 31 cent level here. If it breaks down, that would be a negative. That could imply a negative judge ruling. If it's able to rally up and take out, then you got the positive side. So basically, a wedge pattern is telling you price has been consolidating. We know that from the chart here, and it tells you that at some point here, when the two lines merge together into a triangular point, you're going to get a big break one way or the other.
Are you an XRP man?
No, I'm not. I'm not. No, for me, it's too, as a trader, it's too risky to not when you have a decision that's going to either have a big pop or big drop based on one judge, that's too much for me to handle in terms of risk. I can't quantify that risk and make it make sense. And listen, sometimes I miss the run that way, but I'm
Right.
okay with that as a trader. It's like, you just have to analyze that risk reward.
All right, let's have a look at Terra Luna. Just kidding, bro. I wouldn't do that to you.
Yep, that was a crazy one, man. And by the way, I think before all is said and done, you're going to see more issues like that. There'll be
Yeah,
other cryptocurrencies that go that route. Whether or not as big as that one, that was a monster, but I do think it's not going to be the only one.
it held up pretty well for something like that, though, to be quite honest with you.
Yeah.
What about Polygon, Matic? It's one of my
Matic. All right, let's take a look at Matic here. Share my screen. So Matic actually percentage-wise, and this is one of the things that I've liked about Matic is that it has held up better, right? So we see Bitcoin testing the 19.5-ish area, only a 2,000 off of the 17.5 recent low. And I know I have a lot of charts lines on here, but what I like is that you're way off the lows on Matic on Polygon, and that's actually a short-term positive. It doesn't mean you won't fall. But what I would do is I would look to buy, and I'm going to erase some of these lines so we can. And this is a level I will actually look to purchase Polygon at, this line right here. And again, I'm going to get rid of some of these other ones so people don't get confused. But basically, you get back a retrace here. I think it's a very attractive trend line. And again, for me, this is right around the 63-cent marker. So if you can get a fall into that, I'd be a buyer at 63 cents.
Yeah, and if you're dollar cost averaging or DCAing, I think so far, in my opinion, I don't know if you agree, it would only be Bitcoin, Ethereum, and Polygon right now.
Yeah, that are showing relative strength.
Yeah, you can always get into other cryptocurrencies later, right?
Yeah, exactly. And again, people need to remember that is you don't have to nail the exact bottom. It's more about the safety of the trade, that once it's safe, once you see that something's occurring, then it's an easier risk assessment to make.
Got you. What about HEX for my Hexicans out there?
Hex, let's take a look here. See what we got on that one. I got some former lines on this one. Let's extend that out here. So we could extend that right to there. It looks like this one comes right down here. And wow, look at that. Let me erase this one. So basically what you have is a beautiful triangle, and you're really right at the head here. It's very Ripple-esque in that you're coming to this head. So you're either going to have a break lower or a breakout. And again, if you break out, you probably go back to about 7 cents. A breakdown, you go back to these recent lows around 2.7 cents, it looks like.
What do you think of those inverse hammers with the long tails, though?
Yeah, so that can show that, again, there were buyers there and then sellers kind of came out. But the fact is that it's touching the upper line and the lower line. So that's very, very normal. You have algorithms, you could have computers, whatever it may be, or just investors that were buying there and then selling here. And it just kind of creates this chop until you either get a breakout or a breakdown.
Got you. Do you have a favorite altcoin you can show us?
Oh my goodness, a favorite one. Let's see here. I would keep an eye on, Cardano. Let's take a look at Cardano here.
Cardano.
Cardano had this little bit of an uptrend. It failed, but it's still holding here. It's starting to inch up. Not an amazing chart by any stretch, but you do have a level to trade against, which is pretty close, right around the 40-cent level. That would be a level that you want to see it hold. It's at 45 cents right now. And then let's look at Polkadot here and see what we got on Polkadot. And by the way, these aren't necessarily my favorites, but these are some of the bigger ones to look at. And the chart is much the same here. You had this beautiful pop. It's come back in. Now you need to see these levels hold. To me, you're going to have a lot of resistance around 780. If it gets through 780, it might run to 950 on the Polkadot chart. But again, definitely not an amazing chart here either. I'm trying to think of what other ones could be useful to look at. Let's take a look at Bnb Binance. Yeah, Binance is not a horrendous chart. You have broken below this kind of upsloping channel. But if you look at how far off the lows it is, that's a really nice move off the lows. Now, again, I still wouldn't be a buyer until it probably gets down to like 245 or so down here. But again, I like charts that as we're seeing Bitcoin come down, getting close to its recent June lows, they're holding well above. It shows that relative strength. And if you get a bounce, those should be the ones that perform the best.
Got you. Okay, so a couple of questions for the people out there watching us today. By the way, if you haven't hit the like button the first time I asked, hit it now. Gareth is giving so much valuable information here. So, and check out his links. My question is twofold, two questions. What advice would you give traders, new traders and intermediate traders right now?
In a bear market, education is everything, right? In a bull market, you close your eyes, you throw a dart at the crypto board or at the stock board, and you probably make money. In this environment, it separates the kind of the people that don't know anything from the people that have actually learned things. So you got to start learning. You got to start being able to control your emotions. There's basically three keys to becoming a master trader, right? You have discipline, which you have to be disciplined or the markets, especially bear markets, will eat you alive. Emotional control, which is emotions, goes into the same kind of thought process. You can't get excited at the highs, like on Bitcoin at 69,000. You have to remain objective. And then also you have to look at it and say, how do I use that knowledge about noticing the emotional state of investors that aren't me? And how do I use that to my advantage? When you see everyone clamoring for Bitcoin at 69,000, you need to be able to step back and say, whoa, that's kind of scary to me. That's a mark of a top. And let me not chase that. And then lastly, technicals, charts, you have bottoming tails, you have topping tails, reversal I mean, there's everything in the chart is like a book in a foreign language. We don't know how to read it. If we learn how to read it, it's very, very helpful to making money in any market.
Yeah. The best example I could think of is music, the notes.
Yeah,
It's
that's
a
right.
different language. And what about people that don't know how to trade, that maybe want to get involved right now and they're saying, oh my God, everyone's scared maybe. Should it be time to buy? Should they wait? What would you advise people that don't have a trade, are not traders, they're quote unquote investors?
So I think the biggest thing is to do very small position size. So if you have a project you're interested in, if you have a stock that you love, there's nothing wrong with trying it out, but especially in a bear market, try it out very, very small. I would generally tell you to gravitate towards the better things like Ethereum and Bitcoin, or if you're in the stock market, you look at some of the better quality names that you know won't go bust in a really bad recession. But again, start small. Doing it small, number one, it takes emotion out, right? If you have $100 in a stock or in a crypto, you really don't have that emotional nature to you where you're like, oh my goodness, every little uptick and downtick you're freaking out over. That's important. And it allows you to dollar cost average, which is the name of the game here, right? You know, Bitcoin, I'm a big believer long term. It may go to 5,000 for all I know. But if I dollar cost average and slowly inch in, my average gets lower and lower. When we get the bull run, I do very, very well.
Exactly. Gareth, thank you so much, man. Hoping to have you back in about what, 2 weeks-ish?
Yeah, 2-3 weeks should be perfect.
Perfect. Thank you very much, Gareth, and I'll see you soon. Take care.
Thank you. Take care.